Welcome to this episode number 100 of Your Next Trade. Yes, we already did 100 episodes of Your Next Trade. So week after week, we are trying to help you navigating the stock market, the different asset classes. And in 2025, we have been very lucky because the market has been pretty busy. And the last few weeks for us traders have been absolutely phenomenal in terms of opportunities. But let's start with what we had just after Easter. We had the options expiry resurrection. So what happened if you look at that chart? We had last Thursday instead of the natural, Friday every the third Friday of every single month due to the Good Friday, the option expiry went on Thursday, and as you can see, we had a bit of a sell-off on Monday due to tariffs and a bit more noise. But as often, what happens is just after the expiry, we get a reset of positioning, and the market the whole week from the Monday morning really rallied, as you can see, up and up and up and up. And as we're going to be seeing later, the stock market have been very, very strong. So the tariffs have been, the noise around tariffs have been coming down. There is a lot of noise and actually fight between the pro-Trump and the not pro-Trump about tariffs, who's going to be winning. It is pretty clear that the market at the start of April didn't like it that much, and due to the moves that we had in the bond market. So if you remember correctly, we had the US 10 years that moved from 4% to 4.6%, and due to this pressure on the bond market, the Trump administration had to back off. That is that simple. Jamie Dimon came online. You had many other big speakers that came and say, look, you need to lower the tune. Why? Because the bond market is under pressure. You get the yield coming higher, and that is not good. That's telling us that the economy is clearly going into pure recession. And 10 days after announcing those big tariffs, actually Trump, back off. And since then, volatilities have been coming down, stocks have been going up. So, but more importantly for this week, as we see here, we had really a very strong week for assets. So this is a pure risk on where S&P 500 was up 4.6%, Nasdaq 7%, Europe as well, very strong. Bitcoin 11%. As you can see as well, we had a bit of a flattish week for most asset for most FX, despite some reversal. So this is something that we're going to be looking when we look at technical analysis. So looking at gold as well, we had some massive moves this week as well. So what about the week to date industry performance? If you look at the Nasdaq, so this is what you have here. You get the S&P here, and the usual big outperformers. We are talking semiconductors, software, cloud, internet, technology. So pretty much the winners that we had since 2023, but the ones that struggle since the start of 2025, a bit of a reversal. So we are back to the momentum story, at least for this week. We are back to the semiconductors. Passive investment has been pretty good at putting money into that space. And what we saw as well is retail traders have been very active and buying the dips over and over. For the week, we had 1.5 to 2 billion plus in names like Tesla, like Nvidia. So this concentration, we are back to the story of concentration, and that pushed the market higher. So in terms of sectors performance, what about, you have consumer staples down on the week because, this is the typical risk on, and consumer staples, which was doing so far pretty well and still doing well. For the year, we are talking, this is one of the very few sectors that are up with utilities like 3.4% on the year. When we have the risk on like we had this week, obviously technology, consumer discretionary, due to the weighting of Tesla has been doing very, very well. So what about the rates? Actually, rates are back to 4.25% roughly. So it's not as good as what you should expect in a very strong market. And the market is still questioning, the intention of the Trump administration about tariffs. So we are not back to the 4% level that we had pre-tariffs level. And as well, we had some okay bond auctions on Wednesday, and Thursday that were okay, but not that great. So there is really a question mark of, how going forward the bond market will be digesting information. What about the Fed fund rates and the Fed expectations? As you can see for December, now the expectations are for roughly 3 cuts until the end of the year. We are talking minus 83 bips, so minus 0.83%. That is coming from 2 cuts that we had at the start of the year. We're gonna have the Fed in 10 days. For the time being, we should not see a lot of news in the next 10 days due to the FOMC blackout period. What about the VIX? So volatility is still at 25% for the VIX for the 30 days, coming down. And actually, if you look at how the market has been behaving very well, we are talking stocks since Monday, or I should say the end of Monday. VIX has been coming down, but not that much. You could expect like a much lower VIX. So volatility is still pretty high. Why? Because there's still a lot of uncertainties going forward. So let's jump into technical analysis, starting as always with the S&P 500. And here, this is the future. What I think is interesting. So you see, we are back to the level of when we started the sell-off from tariffs on the 2nd of April. So if you remember or not, we jumped into 57.50 just after the news. Then we started to sell off. We closed around 5600, 55.50, and then we sold off massively. So we are back to this pre-tariffs levels. I want to believe that the pain trade is on the way up for the time being. Why? Because many hedge funds actually degrow their positions, so they reduce their exposure. I think retail is pretty much in control since the option expiry, and I want to believe that you will have to challenge this trend again and this 200 moving average. So I don't have any position in terms of S&P, Nasdaq, or whatever. I'm pretty light. I'm waiting for actually less uncertainty, and I'm more reading the tape, so I'm more into single names that trading the futures here. But my feeling is, we could be targeting this 5750, 5800. Again, this is a very low conviction level. I want to believe that this is the pain trade. We got the earnings season, and I'm reading too many bad headlines on Trump and what Trump is doing, which is the total opposite that we had in November and December, where many people were positive and actually we sold off. So to me, the pain trend is on the way up. Conviction is low still. What about the Nasdaq? The picture is pretty much the same as the S&P. Obviously, it outperformed over the week, but we are talking very similar chart with the 200. And here I want to jump into looking at the Fabulous 7, where the chart is the same again. So you got this trend, we broke this trend on the way down. We are, if you look at this trend and the 200 moving average, this is exactly the same level. So those are the charts, they are all look the same. We are being driven by Fabulous 7, Nvidia, Tesla these days. And actually looking at Tesla, if you think about it, they came with very poor numbers. So this is kind of lagging indicators now, but we had a very strong Friday because of, guess what, 0 day to expiry. So when you do your earnings on Wednesday after the close, on Thursday it's trading sideways, but then on Friday you're pushing very hard with a Gamma Squeeze, and this is what happened. And as you can see, strong volume with the hopes that Musk is going to come back. So charts are pretty much the same. I want to finish with the gold. So that's something that we flagged on the community, on the most advanced channels, where we had a very strong reversal. So you can see this candle. This is really a big reversal day. We touched the 3,500, and since then we have been coming down. So pretty much if you go through all asset classes, they will be telling you the same. We had a strong week, strong reversal. Same with the euro dollar, where we went into the 115.50, and since then we have been coming down and we are flattish for the week. So you see big moves here. We go into the 115.73 and we've been coming back. So all the assets for the time being are moving the same. What I can tell you, as was back on my desk, on Tuesday is the liquidity is pretty bad. So if you're trading Europe, for example, liquidity is bad. You do have like a lot of algos. So it feels very much like mechanical. Why? Because you get two factors. You get the passive investment and you get retail that are jumping into those short dated options and are driven the gamma higher. So this is for the technical analysis. Jumping now into what happened for the week. So this is obviously we get the tariff de-escalation, and that explains, why the S&P went up like this. But to me, it's pretty much the option expiry resurrection, where after the reset of those expiry, you have new positioning, you get the short gamma, you get the gamma squeeze. We had the earnings, so this is important to flag earnings because we are in the middle of the earnings season. So far, out of roughly 178 companies in the S&P out of 500, as you can see, earnings have been pretty good. Okay, so it's not like earnings season in terms of results have been bad. The companies have been beating the expectations. Obviously, this is lagging, and what matters to us is, what's going to be happening next. What is what is Q2, Q3, Q4? There's a lot of uncertainties, and what we see for many companies as well is they are downgrading their expectations going forward. What's going to be helping a lot US companies is obviously US dollar being down 8 to 10% versus euro and many currencies. For the exporters, that's going to be helping. So picture so far is for the earnings season being pretty okay and actually pretty good for EPS beat. Going forward, a lot of questioning and a lot of uncertainty. Finally, I want to flag again, who have been the winners, what have been the sectors. So here you get all the sectors that have been outperforming the S&P 500. And as you can see, it goes from Bitcoin, hard to borrow retail, high beta, more short rolling, non-profitable tech. So what does it tell you? This move this week after the option expiry is a bad quality move. That doesn't mean that we're not going to go higher. Okay, very often this is how it starts, when people don't believe in it, and that tells you that we have been driven by the same stories that 2023, 2024. We move higher into those options and those momentum hard to borrow stocks. So what about the catalyst going forward? Actually, for this week, we do have, as always, like the tariffs is the headline. It matters when Trump is going to be waking up and at what time he's going to be putting the tweet. Okay, so this is for you in the US very early. For us in Europe, it's midday. We're all waiting for those new tweets to come. This is exactly always the same. Most of the time, it's going to be happening just before the open. Then we do have a lot of macro ongoing because this is the end of the month, start of the month. So Q1 GDP, roughly it's expected to be flattish for year on year, month on month. Sorry. We do have like a lot of PMIs, ISM manufacturing on the first day of the month. And as well on Friday, we do have like NFP. So a lot of macro going on. We have tons of earnings ongoing. So we are talking Thursday is a big day with Amazon, with Apple as well. Microsoft on Wednesday. We get Visa on Tuesday. So look at this one. It's very important in terms of sectors exposure, industry exposure. What are the leaders? How they are doing? So very busy week that we're gonna have for earnings, and as well we do have like the end of the month. So after such a volatile month, we have the mutual funds, the hedge funds that are rebalancing, that need to show some positioning. So you could see on Wednesday some funny moves at the end of the session. Finally, as well, what we have is the weekly straddle. So by how much the market is expected the S&P to be moving this week, we are talking 2.5% minus plus 2.5%. We don't have any Fed speakers, as I said, because the FOMC is in blackout period, as we do have like the FOMC meeting in 10 days time. We have the bond market where the US Treasury will explain what are the needs for the next quarter and how they're going to be refinancing it. And finally, I want to be looking at something important to me, which is, as a trader, I want to know how the market roughly on average has been trading during over a period of time. So if you look at the S&P futures are roughly at 55.50 since the 2nd of April, the volume weighted, so the VWAP of the S&P futures have been around 52.91. So we are roughly 250 points above. Okay, so we are talking 5 to 6%. My view at the start of this week is if we didn't have any news, we should be trading around that level. We had a bit of de-escalation. I think that has been helpful as well to get good earnings, and as well to see this option expiry kicking on and pushing stocks higher. Finally, the VWAP for 2025 is 58.62. So if you look at the 200 moving average, if you look at the trend, we are talking 57.50. If you look at the VWAP with the time that we have to go there, I think 57, again, 157.50 is a big level. That gives you 150 to 200 points. Again, I do have a very low conviction. I'm really focusing into trading single names these days. I used to be short some names in Europe before we came down. I was short the future as well in Europe. Now I'm very, very light. I do have like some position, but very few. So this is it for me for explaining what has been happening, what I think is going to be happening going forward. This is what we learn, what hopefully you can learn from the 4x4 video series. Mentoring, we had a lot of people joining most recently, doing the mentoring with me, with Etienne, pretty busy. So if you want to do some mentoring session, you should reach very quickly because the window is closing. We got the training community on Discord where we have one big free channel. And actually, if you want to have access to more than 30 most advanced channels, you will have to subscribe. I think this is very helpful. We are building the product. Is getting better and better. Any questions, you can send me an email at greg@duponttrading.com. And I wish you a happy trading week. Bye-bye.